Hey everyone, welcome back to Corporate Decoder, the place where we take a peek under the hoods of big companies. Today we are diving into EUROSEAS annual report, a company in the container shipping business. It's like a giant game of Tetris, but with cargo ships. Turns out navigating the stock market can be as turbulent as the high seas, so we'll see what they reveal. Before we get started, if you appreciate these insights that cut through the corporate jargon, make sure you're subscribed. We've also got a Discord community linked in the description where you can discuss these things with like-minded people. EUROSEAS just dropped their annual report for 2024, ending December 31. So we're going to sift through the pages and see how they handled the choppy waters of the container shipping market. What do the numbers say and what are the risks? Let's find out. First off, EUROSEAS is traded on the Nasdaq with the ticker symbol ESCA. So if you want to keep an eye on their stock, that's the one to watch. They're using US DRAC, which is good and makes it easier to compare them to other companies. Like most companies, EUROSEAS wants to play it safe. So there is a warning saying that the company is including this cautionary statement to take advantage of safe harbor provisions. They want to protect themselves from liability. They tell us to be careful of forward-looking statements because things might not go as planned. Things like their future profits will depend on shipping rates. Since the company's future is tied to charter rates, which are basically rental fees for their ships, they mention a big risk. Those rates can change a lot because the shipping industry goes through cycles. That means their revenue can go up and down. This is due to demand for cargo ships and the size of the current fleet. They are also subject to potential rerouting away from the Red Sea, so they are saying that any benefits from that disruption might not continue if things go back to normal and trade stabilizes. Another risk is that the value of their ships can change quite a bit. If the charter rates go down, then the fair market value of their ships will go down as well. This may affect how much money they can borrow, and the banks can say, hey, you need to put up more collateral because your ships are worth less now. This in turn might restrict their cash and affect their ability to grow. Something else to keep in mind is that the order book to build new container ships is growing, so there is a risk of an oversupply of ships. If they can't renew their current charters at good rates because there are too many ships, they might not be able to pay dividends or meet their loan requirements. Geopolitical conditions like trade wars and armed conflicts, such as the one between Russia and Ukraine, can disrupt trade and affect their ability to do business. So it's not just about ships, it's about what's happening in the world as well. And here's another buzzword bingo, ESG, which stands for environmental, social, and governance. They're facing increasing pressure from investors to be more environmentally friendly, which could mean additional costs. If they fail to adapt to or comply with investor, lender, or other market participant expectations and standards, or if they are perceived to have failed to respond appropriately to the growing concern for ESG issues, we may suffer from reputational damage and incur costs related to litigation or as a failure to comply with regulatory requirements, and our business, financial condition, and or stock price could be materially and adversely affected. Let's scroll down to the financial highlights. For the year 2024, they're reporting a fleet utilization rate of almost 99.7%, meaning their ships are almost always on the move and making money. The average charter rate, which is what they charge to rent their ships, stood at 28,054 AS per Tureb. To better understand them, they are a Marshall Islands company, but most of the management is in Greece. On March, the company spun off its older vessels into a separate publicly listed company called Euro Holdings, which trades under the ticker ALD. As of April, EUROSEAS has 22 container ships. The total cargo carrying capacity is around 67,500 TU or 20-foot equivalent unit, which is how they measure cargo. This section is basically saying that events outside their control, such as war and terror attacks, may prevent them from obtaining additional financing, which may restrict the implementation of their business strategy. Another key risk, they depend on Euroball to manage their fleet. EuroBolg is a ship management company that is owned by the CEO of EUROSEAS, so it's all in the family. Now, because EuroBolg is a private company, there is not much public information about it. This section is about the shareholders. The largest shareholders are insider types. If you combine their share ownership, they have more than 50% of the voting power, and because of this share ownership, and for as long as they own a significant porter transactions. A lot of it is determined on locating and identifying suitable high quality second-hand vessels, obtaining new build contracts at acceptable prices, obtaining required financing on acceptable terms, etc. There are other risks that they may not be able to hire or retain employees. Piracy, acts of terrorism, and armed conflicts are another factor that may hurt the company. Now let's jump to the key information here, the financials. Time to see how they actually did. Their net revenue totaled $9 million in 2024, a 12% increase. Looking a bit deeper. For 2024, vessel operating expenses were up to $46.7 million and management fees paid to related parties was up to $7 and management fees paid to related parties was up to $7.1 million. General expenses increased to $5.9 million. One notable adjustment is that impairment loss did not repeat. They've also had net gain on sale of vessels for nearly $5.7 million after a prior related party transaction. But let's keep going to check our final number, which resulted in net income of $112.8 million with diluted earnings per share of 120 cents. EUROSEAS may be subject to additional volatility as a medium-sized accelerated filler as a public company. This can put their price at additional risk. So what's our take? EUROSEAS operates in a cyclical industry and is affected by matters out of their control. While revenue increased in 2024 compared to 2023, the average charter rate was actually lower. Most ships are tied up in time charters, but those will need to be renewed sometime. Overall, this all means that EUROSEAS did great despite various geopolitical and economic uncertainties that are out of their control, but these factors make future earnings unpredictable. Alright, that's our breakdown of EUROSEAS' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussion. Thanks for watching. See you next time.